Today is the day before Jerome Powell goes in front of Congress. Generally, the federal chairman or the federal chairperson tries to kind of finesse his words when he gets in front of Congress so that he doesn't cause any market reaction because that's like a huge uncertainty in the market. So, the federal chairperson or the federal yes, Jerome Powell, the federal chairperson or the chairman, he generally tries to craft his words in a way that it doesn't cause market effects. But you also have the entire stock market, you have the global market listening to his every single word, trying to pick apart pieces and trying to draw conclusions from it and to trade it. Today was kind of let's say a outlier. So the market could trade a little by itself, but the market was still positioning itself for the Congress meeting where the Congress generally presses the chairman on what are his next moves, where does he see the market going. And I hear that the word the market is looking for is pause. Pause, if he says the word pause or stop or rate slowing or rate cut, that's when the market is going to go crazy tomorrow. If he doesn't say anything to that effect, the market might go down. Today, traded the market solely off technicals. I'm just going for technicals. Technicals seem to work best when you don't have any market news, market catalyst, and also it can tell you what the market is doing, even if you haven't heard the news, right? So I made two trades today. For some reason, my platform isn't allowing me to pull up my portfolio. It worked on my phone. So I took four screenshots. One screenshot was when I entered the first trade. The second screenshot was when I hit my stop loss. The third screenshot was the entering of the second trade of the day. And the fourth screenshot was when I closed the trade for some profits, right? And I'll show you where I entered each trade, where I got stopped out, where I entered the second trade, and where I closed the trade for the trade to continue running, why I entered the trades, etc. Right? So let's get into it. So the first trade, and I hope you can kind of see it here, kind of try to zoom in. I can't zoom in this anymore. I'm sorry. But the first trade was QQQ 100 shares to the upside, right? And I'm using the three line strike strategy or the bullish engulfing strategy. So I entered to the upside when I got that indicator. So you see, I got this indicator on the 11 o'clock candle. However, I entered the next candle after. So I wait until this candle is fully closed. Then I enter to the upside with my stop loss being a little below where the indicator opened, right? For the bullish side, of course. So I entered, and I can just use a long position to show you where I entered and exited, and I have it right here. So on this candle is where I entered and exit, and I got hit out at my stop loss. And if I go to my settings here for this indicator, I can set it where my entry price is 303.73. My stop loss would generally be a little bit below this. So on the next slide, I have the stop loss. It was at 303.07, and this will move it exactly there, 303.07. And then should be my take profit should be uh say it's a 2 to 1. My take profit should be 305.73. 305.73. What's going on here? Hmm. Seems like something wrong happened here. 303.73, 303.07, right? And 305.73. 3. Is it not creating? 303.73, right? Stop loss is, my take profit is 305.73, and my stop loss is 303.07. My bad, it's just because I had it set. So you can see where my stop loss was a little bit below the open of the previous candle if we're going to the bullish side, and we had a 2-to-1 risk reward, actually a 3-to-1. And something I noted today, my reward can be a little bit closer. My reward can be a little bit smaller. So if I'm risking, say, $67 for this trade, my reward would be $120 just to have a exact 2-to-1 risk reward, right? You can see I got hit out exactly on the second candle. So I got hit out on the second candle. The same candle that I entered in, actually. I got hit out. And then that was within, let's see, that was within 10 minutes. Within 10 minutes, I got hit out of that same candle while I was entering to the bullish side, right? And I was also paying attention to the MACD. So I had a solid green on the MACD while I was entering this trade. So I was just thinking that we would have continued. However, the rest of the candles, you could see the MACD kind of dying down. As the MACD was kind of dying down, that's kind of bearish, right? That's kind of telling you that there's not a lot of bullish support in the market. And then we had a perfect 3-line strike, bearish indicator, right? Also with a small red MACD. So that's kind of telling you there is like selling pressure coming in, not strong selling pressure as yet, but then as you can see, as it continued, you had more selling pressure. So without even looking at where I entered on this chart or on the platform, from you see this and you also have a MACD here, I'm more than likely going to take the trade. So I'm seeing where you can use the MACD, you can have the 3-line strike, and you have other confluences. You can also see the signal line kind of crossing over and starting to pivot. As you have the MACD kind of pointing to the downside, that's very bearish, right? Unless you see it kind of start to pivot to the upside, that is very bullish. So we have the bearish indicators are probably entered on the second candle, and this was the, let me see, when was this, when did I enter this trade? 11:48. 11:48. Interesting. Let me see. 11:48 a.m. was when I entered the trade to the downside. You see exactly where I entered this trade. You know exactly what happened. Exactly what happened was I saw the rejection here, and I more entered off the MACD just dying down. That's where I kind of decided to enter to the downside. And then after that, we had the 3-line strike bear formation actually come up. And I had this short position drawn out. So I have it here. I entered on the 11:45 candle. Let me move it to there. And then we can edit these settings a bit. So I entered to the downside 303.06. And then my take profit, what was my take profit? So for a 2-to-1, my take profit, and you enter into the downside, my take profit, having it be a little bit above this, my stop loss, my take profit could be, take profit would be around, say for a 2, would be around 301.98. And where did I close it here? I closed it at 301.68. So I actually closed it a little lower. So I made a little more than 2 on the trade. However, I that would have been the ideal take profit to get a 2-to-1 risk reward on this trade, right? So I entered at 303.06 and then I closed out the trade at 301.68. Let me bring it exactly to where I closed out the trade. So 301.68. 301.68. 301.68. So it was a 2.16 to 1 risk reward trade, and that actually turned out good. So what I'm noticing today is like just seeing where you can have this would have been the ideal point to enter the trade. You're not getting the start of the reversal because you could have gotten it a little bit here while the weakness was starting to show up a little bit more. But if you waited, you could have had this indicator, which is the 3-line strike bear move. You have weakness in the MACD, or just the start of the selling pressure in the MACD. You have the crossing. You also have the crossing of the signal level and the MACD kind of starting to point down. So that's just multiple confluences. And then what else here? We're not seeing I wasn't seeing the smooth averages. The moving averages didn't have anything to do with this trade today. So even though I took the trade out at a 2.6 to 1 risk reward, I could have even taken it a little bit more to the downside. However, I didn't want to be greedy. I wanted to just keep it strict to the rules, take it out at a 2 to 1, like I would have, like, say it was a day when it was just very choppy. I wanted to stick to the rules and just exit there, not think about any more profit, as we could have taken more to the downside. Tomorrow is Jerome Powell in Congress Day, right? And you know, I do not like trading these big news days. So we have a CNBC article here. CNBC Daily Open, all eyes are on Jerome Powell. What you need to do today. So tomorrow, U.S. Federal Reserve Chair Jerome Powell will testify before Congress as a week packed with economic data releases lies ahead. That includes February's job report, which will show whether the Fed's aggressive rate hikes are starting to cool the economy, right? So stocks in the US were a mixed picture as investors brace for a more hawkish commentary from Jerome Powell. So it's like stocks are bracing for impact. They don't know what's going to happen tomorrow. You have news risk tomorrow. So the market can go any way because nobody knows what he's going to say, really. Or at least some people know, but for the most part, nobody knows what's going to happen. And then here's another article. So Quartz is saying the Fed is preparing for more interest rate hikes with an eye on the jobs report. So this is Jerome Powell. They're saying he has a Congress hearing this week and that will set a course of action. So the first day when he's going to speak is March 7 and the day after is March 8. So he will participate in the hearings by the Senate Banking Committee and the House Financial Services Panel, respectively, to discuss the bank's latest semi-annual monetary policy report. So, you know, he controls the monetary policy, kind of tries to back down inflation. So whatever he says is kind of important to the world, but mainly the US economy and the US banks. So let's see what happens. I mean, higher rate hikes, it's actually bullish for banks because banks actually make more money, but I'm not sure how they will react just from the start. But you should see a negative reaction if he's speaking about more rate hikes, and we should see a more bullish reaction if he speaks about like a rate pausing or a rate slowing, right? But that's it for today. I hope you appreciate just me sharing the strategy because I'm actually seeing a lot more, some things that I can look at and see, am I wrong? Is this trend going to continue? Where might be the next trade for the day? So I took two trades today. One was a loss, and the second one was a 2-to-1, which covered the loss and actually made some money, right? See you tomorrow. in the next video, guys. I'm not sure how we're going to trade tomorrow because I just do not like trading news. It's just there's too much risk. There's too much risk when it comes to just trading news related events like those. All right. But I'll see you in the next video tomorrow, and bye bye.